Hey everyone, welcome to a Optimum FX weekly analysis. It's currently the 31st of October here, 2021. So it's the start of the new month. So it's about 12 hours until market open from where I am. So as usual, I'll be analyzing our major currency pairs, be looking at gold, and be looking at our global equity markets. Okay, as usual, first thing I'll do is look at what macroeconomic data is going to be released. Once we understand the fundamental impacts, we'll go to the charts and map out potential trade ideas with the technical and fundamental confirms. Okay, so firstly, let's quickly have a look. So start of the month, so we will have plenty of data to start us with the new fiscal month. So first thing we do have is ISM and market PMI numbers. On Tuesday, we don't really have too much in the US. On Wednesday, we do have ADP employment change, so keep in mind that we do have non-farm payrolls and unemployment rate employment change numbers being released as well. And on Wednesday, we do have ISM and factory orders. Okay, so obviously that's gonna you know, from last week we did have durable goods orders, and we did have inflation numbers come out as well. But yeah, we do have to keep that in mind. So overall, you know, across our major economies, there's obviously been a bit of a cool down with decreased demand, mainly due to the extreme supply constraints and supply bottlenecks that we have at the moment, because obviously the output that they can do at the moment, and considering that employment isn't where they need it to be at the moment, like output, you know, hasn't been able to sustain the current demand levels. Okay, so on Wednesday we do have FOMC meetings, so this will probably be the most important thing as well. Okay, so US dollar pairs, I won't be surprised if they do range until Wednesday. They'll probably be like in a high time frame range. I don't know that yet, but when we look at the market, you know, probably on Monday or Tuesday, I mean, obviously we're going to know by then, but just don't be surprised if we just be in a high time frame range and consolidate, you know, with any of our risk currencies against the dollar itself. So just keep that in mind. So the main agenda on the table is for FOMC is the Federal Reserve to start tapering, so start purchasing less government securities, so pretty much less treasuries and mortgage-backed securities. So that obviously, I've said this a bunch of times before, but I'll say it again just to keep us all refreshed with pretty much the FOMC's or the Fed's mandate. So they do have the data, like they do have the macroeconomic data to show, you know, growth in the economy, to show that it is flourishing and that it's time to decrease fiscal assistance. Okay, so when they actually do start tapering, you know, that is going to see, you know, a lot more inflows into the dollar, because there will be, you know, less printing of the dollar, you know, month over month. Okay, and it'll be a signal to start hiking rates, you know, sooner than later. They're saying possibly, you know, by mid 2022. I doubt it's going to be that soon, because that is just, yeah, that's just for an economy like the US, and the amount of money that's tied to the US, and the amount of debt that's tied into the US, like I just don't think that that's really sustainable. You know, like there's going to be a bit of a spasm in the markets. I don't want to go into too much detail about that, but yeah, that is the main agenda. So don't be surprised if we're in some high time frame consolidation prior. But then we do understand that tapering is bullish for the dollar. Like that's probably all you want to hear. You know, it's just bullish for the dollar, and we can see a pullback on our risk currencies as well. Okay, and pullback on our equities. Yeah, so obviously that's all been priced in prior. And here's the thing, right? On Dow Jones, US30, we're pretty much at all-time highs. So really, would it make sense, you know, so would it make sense for price just to continue up higher when they know they're going to decrease liquidity, or is price being pushed up to the new all-time high just for it to push down, okay, and continue in this bullish structure, right, and potentially pull back down here, then come back up to reach, to come back and break above 36k. I won't be surprised if that happens, but we'll go back to the charts shortly. So it's the main agenda. As usual, we do have jobless claims, goods and trades balance numbers, and on Friday we do have employment numbers coming out, so NFP, unemployment rate, employment change. Alright, so moving on to UK, we do have PMI numbers coming out on Monday. On Thursday, a day after the Fed's interest rate decision, we do have the Bank of England coming out with their interest rate decision, but we do have to keep in mind that England have been saying, or have been rumouring, their members rumouring, and the governor as well. So Governor, was it Bailey? Yeah, Governor Bailey, he has been talking about increasing rates by the end of this year. Okay, so if most likely the US starts to taper, more than likely I feel like the Bank of England will start to rate hike at the end of this year, so probably in December. I don't think it's going to happen this month. Like, I don't think it's going to happen in November. It's probably going to happen next year. Oh, not next year, next month. So yeah, just got to keep that in mind. And yeah, that's about it. Moving on to Euro, we do have a couple ECB members speaking on Tuesday and then on Wednesday as well. But prior to that, we do have unemployment numbers, which these ECB members will be speaking subsequently after this data has been released. We do have the European Commission releasing their economic growth forecast. Just saying, what they're forecasting is going to happen with the economy. Obviously talking about, industrial production, employment, pretty much just the output of the economy and what they're forecasting. So they could bring, temporary spike into the euro and into euro equities as well. And on Friday, we do have retail sales, so consumer confidence, and ECB members speaking throughout the day. So moving on to Japan, don't really have much. All we got is Bank of Japan's monetary policy meeting minutes. Last meeting was like everything was status quo, uncertainty about COVID. Everything is like, honestly, everything. The economy is suffering like a bit of a pullback, but over the long term and in the coming months and quarters, we will see steady growth, better employment, better inflation, and so forth. So everything, like, that's what the central bank says. Like, when everything's status quo, that's what they say. We're not where we need to be to start rate hiking or tapering on our bond buying. But if we do see some, good employment, good inflation, we can see strong industrial production, strong consumer confidence, retail sales, we can definitely start to tighten the monetary policy conditions. Like, that's what they will say. That's what every central bank member says. Okay. But yeah, that's about it for Japan. Nothing too much. We do have international merchandise trade in Canada on Thursday. So this is just like goods. This is just like exported goods. It's not really, it's not services, it's just goods. It's just exported goods. And on Friday, along with US employment, we do have Canadian employment numbers coming out as well. So moving on to Australia, we do have ARG performance of MFG index on Monday. In China, we got manufacturing PMI numbers. And on Tuesday, we do have the interest rate decision, so one day prior to the Fed's interest rate decision. But knowing that the CPI was actually better than expected, and based on the comments from the RBA, they were actually, saying instead of their forecast of interest rates being increased by 2024, they come down to 2023 because having those strong inflation numbers, and especially Australia coming out of the COVID situation, COVID lockdowns starting to ease right now, so that's obviously going to give a lot of prosperity with the Australian economy, a lot more revenue across businesses and corporations and so forth. So that's why they're forecasting a quicker rate hike by mid 2023. But yeah, we might see if we see more hawkish comments from the RBA, we can definitely start to aid with some Aussie bulls. So yeah, we're just gonna have to keep that in mind, okay? But we're just gonna keep in mind. So when the RBA, or honestly, when any central bank, this is some source right now. So when any central bank is talking about hiking rates, you will see a massive pullback. I'm not doing like a 10% correction, but you'll see like a strong pullback in your in the equity markets in that country, in whatever country stock index it's in. So just keep that in mind. Moving on, let's go to the charts. I want to make this very quick because I don't want this to go for like more than 30 minutes, because I feel like I don't know, I feel like it's just a lot of information for people to digest in a short period of time. So anyway, so talking about the Australian dollar. So yeah, Australian dollar at the moment. Alright, so next level I'm probably looking at, I want to see if we can actually peak at this high. What's that? It's like 76 flat. Okay, so 76 flat, where is that? So roughly here, right? So 76 flat, okay? So it's 76 flat. Okay, so when talking about the Australian dollar, we have been on this strong bull run, clearly breaking above these highs. But once we actually did clear above these highs, we actually did give a nice little retest, and now with this, we were in this like high time. We're currently still in this high time frame order block. Now, when I'm digesting on the lower time frames and looking at these previous candle body closures on the left here, I want to see how we do react just under the 75% mark. 75% mark. Like, overall, I'm still bullish on the Aussie, but to me, just with the catalyst of the Federal Reserve, most likely going to start, tapering their bond buying and purchasing of US securities. We can see some inflows into Dixie, and here's the thing: like we've been on the strong bull run, okay? Coming up here, pull back here, impulsive move, pull back, but now we're just starting to consolidate in this area here from 75,400 to 74,600, so it's roughly like an 80 pip range, okay? So to me, medium risk buys want to get a solid candle body retest here on the higher time frame, on the 4 hour, preferably. But however, I am most likely going to be taking sells once we clear below here, once we clear below 74,600, okay? Obviously your high risk, high reward buys up here, but medium risk buys here at 75 flat, 74,600, high risk buys, but just with the catalyst from the Federal Reserve, I am potentially gonna switch my bias in the short term once we actually close below here, start to retest, because I am starting to notice that the bullish momentum is starting to exhaust, okay, after failing to close above these highs here. Because like honestly, like it's starting to, like it's clear, because we're just on this mad bull run, but now we're just starting to consolidate here, okay? But obviously safer buys once you retest above 75,400, okay? So that's what I'm looking at the moment. So I'm only going to be taking sells to 74,600, not really looking for sells taking below here, because yeah, I just don't think there's enough sell side momentum or sell side liquidity for us to push further to the downside. Like I said, realistically, when I trade, I really have like one bias. Like here, I'm in a bullish bias, like 100%. I'm in 110%. Like if you're in the sell bias from this price action, like I don't know, like to me, you're really just trying to pick a top. Like you're really trying to pick a top, because what you really need to do, you don't predict the market. Like you need to react. You need to understand what buyers and sellers are telling you. Okay, you need to understand where the momentum is on whatever time frame you're trading. So to me, obviously, I've got one main bias, but I've always got like, I'm in a bullish bias, but I can react to sells once you break below this liquidity level, retest and push further to the downside and come down to here potentially. But realistically, when I'm looking at price, I'm just like, we're just starting to exhaust at these highs here, which I'm not really too surprised, okay? After coming down from like, I think it's like 71 cents, now pushing up to nearly 76, just about, like we're chilling at 75, it's 500 pips. Yeah, so to me, we are starting to exhaust, but overall I'm still bullish. But I probably want to see, I need to see what the Federal Reserve does, okay? Obviously, if they start tapering, we can take some sells. Okay, as we'll see, inflows into Dixie. Okay, moving on to Euro next. Just want to say, when you mark out when you mark out, you know, key zones, key levels on the 4 hour, like honestly, I drew these zones like maybe like a year ago or so, and like I haven't adjusted them. Like they've always been like this, you know, that like they've always been like this. So I just want to, you know, like it does, like when you go back and you look at, you know, where price close, you know, especially on a high time frame, and then, you know, there's, you know, I'm not saying every time like it's going to react to my key levels, but a lot of times it does, you know, but I'm not going to just take a sell here. No, I'm going to wait for some exhaustion, or I'm going to understand the high time frame bias. Okay, but other than that, let's just focus on here. So obviously, like I did say on my last analysis, you can go from a Telegram. I was just saying that Dixie is most likely going to be bought by the end of the month. And if we quickly have a look what Dixie did. I mean, if you don't believe me, like you can have a look at the last video, or you can go from our Telegram. And I was talking about these euro shorts on Friday, but I was taking the sells below these previous order block high. Okay, so I was talking about shorts here, and once we start to break below, potentially targeting to around this area here. I wasn't really seeing euro coming down to the yearly low again, but anyway, so that's all said and done. So the question is, how can we react? How can we adapt to price action today? Okay, or this week? Right. So euro. So yeah, let's just mark out the lows here. So what's that? So that's about 115,300, and we got these lows roughly here. Yeah, probably, yeah. Okay, so probably what I want to see, I don't really see euro dollar like pushing further to the downside, breaking here. You're probably gonna see that from the FOMC meeting. Like, I won't be surprised if we're just in this high time frame range here. Okay, high time frame range, because of just how weak the euro is at the moment. But I know if we potentially snap back here, snap back into range, close above here, we can start to push to the upside. And then I'll be targeting, you know, 116,200. Okay, but obviously with sells we can take them further to the downside. Okay, and honestly, I'd probably be targeting like initially 115 flat psychological price level and 1146. Okay, so that's probably what I'd be targeting on the higher time frame. But honestly, fundamentally, the only reason this is going to happen if we do have some dovish comments from the ECB and tapering confirmed with the Federal Reserve. But we do have hawkish comments from the ECB. You know, there's a potential that we can potentially, you know, grow liquidity here. You know, get a nice candle body support at 115,300. And continue and to consolidate and eventually break in, retest, and snap back into its previous range. Okay. All right. So moving on to GU quickly. GU is like very similar. Obviously a lot stronger than the euro. Due to the Bank of England talking about rate hikes. Okay. So after breaking this bullish channel, I want to see how we react at 136,500. Potentially, I currently just want to see how we react at 136,800 as well. You know, these previous lows here. Okay. If we do continue to push further to the downside, we can take the break and retest sells here, and take them down to roughly 135,600. Okay. But but you know, there is a possibility if we do generate a high time frame candle body support at these lows here, we can start to take these buys here. But I'm just recognizing that, you know, there's a lot more sell side liquidity with GU at the moment. But to be honest, I want to generate a high time frame candle body support, continue back up, and just not necessarily correct this whole move, but to me, I just don't, like fundamentally and technically, there's just no need well, I don't really see a reason just to start selling, just to start selling off the pound. Obviously we can adapt to some sells right now, but to me, I'm not really going to start selling right now. I probably want to see, I need to see if we can close below 136,500, break and retest below here, and then carry down to these previous order block lows. Like that's like, to me, like this is a bit of an indecision level right here. So I probably won't be trading in this range. I'll probably be analyzing a lower time frame, analyzing the strength of buyers and sellers, and be looking, I'll just be mainly just looking at the dollar as well, and seeing where the inflows and outflows are. So once you break and retest below 136,500, stay below here, nice candle body closure below here, retest, we can start to push further to the downside and snap back in this previous range and see a lot more sell side liquidity. Okay, and see a lot more inflows into dollar. Okay, so next thing is GJ, GU, very similar at the moment. We are just seeing a bit of a, bearish crypto structure. To me, on GJ, I want to see if we can clear below 156 flat. So this candle, so this candle actually closed below the candle bodies, but there's a lot of indecision, okay? A lot of indecision because price did actually reach these weekly lows down here, but we actually did start to pull back up slowly, but we actually did close below. And the momentum is like very mixed, but to me, I'm just following the current I'm just following the current price action. I'm just currently reacting to the price action, but potentially I want to see how we react at 154,700. Okay, so yeah, I do want to see how we react here. I'm seeing a lot more sell side liquidity in GJ. So realistically, I want to see GJ retest here and then push further down, great liquidity here. But yeah, there's strong bearish corrective structure being shown currently after a lot of profit taken from these highs. But to be honest, don't be surprised if we're in a high time frame range like prior to Bank of England's interest rate decision. We don't really have much coming out in Japan this week, and England, yeah, we don't have much coming out besides PMI data. Okay, so, and I believe retail sales too. So yeah, like we don't really have much coming out. So just keep that in mind. Obviously, if I'm looking for buyers, like I want to snap back above 156,700 for some buyers. Okay, so buyers here, right? Because honestly, once we actually did start to come to these levels, we failed to close above here, so that's showing me a lot of sell side exhaustion. Okay, so realistically, I'm not really gonna be taking some high risk buys here. Like I'm gonna wait for the close above here, retest, clear above these highs, and boom, safer buys once you break above 158 flat. But that will probably be a while. So moving on to USDCAD. Yeah, so USDCAD is in a bit of a higher time frame range. So yeah, we're just in a bit of a high time frame range. These lows here, roughly these highs here. Okay, we're starting to get close to this previous range. Okay, if we actually do start to close above 124 flat, and we do see some depreciation in oil, and we see some strong US macroeconomic data, we can adapt to some buys. And especially, like, to me, I'm adapting to some Dixie longs, like just with the sentiment from the Federal Reserve. Like obviously it's all been priced in and so forth, but to me it wouldn't make sense for Dixie just to come to the downside unless it's just growing liquidity. And it makes sense because the Dow Jones, Nasdaq, and all that, they're at all-time highs at the moment. So I wouldn't be surprised. Like honestly, I would not be surprised if we do see, just a bit of a pullback in the short term and then continue back up. But with USDCAD at the moment, if we close above here, retest 124 flat, we can potentially target 124,500. So that's roughly like a 50 pip move, targeting these previous order block lows, and then potentially going above to 125 flat in the short term. Okay, but in order for that to happen, I need to see, because once we break above here, that's showing me a lot of buy side liquidity, showing me like a lot of buy side and bullish momentum. But yeah, once we retest and fail to close below here, we can continue to push further to the upside. However, close below here, we can take some sells. Okay, so that's what I'm seeing on USDCAD at the moment. Okay, so Dixie, probably one of the most important charts that we're going to be looking at today. So you know, we actually did retest these previous lows here at 94,300. And we actually did clear above this previous higher time frame range. Okay, so right now I want to see how we react, you know, roughly at these lows here, lows here, and roughly just above these previous highs here. So I want to see if we can potentially retest, come back, retest, and then I need to see how we react to what is that, 94,800 or 500. So 94,500. I'm just gonna wait to see how we react at 94,500. And don't be surprised if we're near this price. I won't be surprised if we're near this price level by FOMC meeting. So don't be surprised. Okay, so that's probably what I'm looking at. I'm not really gonna adapt to any sells. If anything, we might get like a deeper liquidity grab before we actually do push up to the upside. However, I'm only going to be adapting to sells once you actually clear below here. So, you know, potentially, I don't see us pulling all the way back to all the way back down to 93,600. So, yeah, just keep those things in mind. So, probably going to see a liquidity grab to 93,800, then push back up. To break above these previous highs here, come back down, retest 94,100, and push up to the yearly highs at 94,500. Okay, so that's probably what I'm gonna be looking for in Dixie. Moving on to gold. So remember, when we're trading gold, we're essentially doing the inverse of Dixie. Okay, so as we've seen Dixie start the rally, gold has been falling to the downside, obviously because they're the opposite. You know, you're trading an asset, you know, against dollar. Okay, if you're trading dollar against gold, obviously, obviously, you're looking for buys because dollar would be the primary would be the primary asset in that pair. Okay, so when I'm looking at, like, to me, I haven't been trading gold for, I think, the past like one week. Yeah, I didn't trade gold last week because it's just, like, honestly, it's just been really messy. It's just been really messy. I mean, I could have taken advantage of some moves on a lower time frame, but to me, it's just messy. So I didn't really take too much part of it. I was just mainly trading GJ last week. But when trading gold, yeah. So when trading gold at the moment, it is a bit messy because, you know, it's just chopping up, push up, corrects it. But now we're starting to see some buy side exhaustion. Okay, obviously, just let me clear that up because it's a bit messy. So right now, I want to see if we can actually close below 1780. I'm seeing a lot more sell side liquidity being pushed up since we didn't actually close above these previous highs here, which was about 1807. So we didn't close above there, so it's really showing me a lot of sell side liquidity. So moving on, next price level we'll be looking at is roughly about 1750, but before that we can really adapt to some sells roughly at 1767, which has been a key price level. Okay, so obviously we can start to push further to the upside, but to me, I'm in a bearish bias. Okay, just with what I've spoken to you about Dixie and the dollar, and the fundamental reasonings as to why dollar can appreciate and break above, you know, certain liquidity levels. Obviously, we can see a bit of liquidity grab, you know, possibly see gold come back up to 1790 to this previous 4 hour. obviously, you know, that can happen, which actually is a line with these previous lows. Okay, so I wouldn't be surprised if we push back up here, come down, push further to the downside, because I am bearish on gold. Like, I'm bearish on gold. Like, I'll tell you something as well. Okay, so with tapering in interest rate hikes, I don't have a reason to buy gold, because yeah, I don't have a reason to buy gold whatsoever, because it's a bearish factor for gold, and gold is only going to appreciate in times of uncertainty, fear, like big, like I'm talking about recession, you know, government's about to default on their debt, you know, fear, you know, pandemic fear. Okay, like that's the only time money will that's the only time people will put money into gold. Okay, so to me, once you break below, like here, I'll quickly show you something as well. So all right, let's just quickly, you know, discuss, this is my trade ideas. Okay, I won't be surprised if we pull back to 1790, break and retest below 1780, push below 1770, and adapt to these sales once we break below this liquidity level here, but safer sales once we break below 1750 and pushing down to these previous lows here at 1730. Okay, so that's my trade bias. However, safer buys above here, like 7 buys above 1810. Okay, so let's quickly show you, so gold right here. I'll quickly show you. I'll make this really quick so people understand what I'm talking about when my chart wants to load. Alright, okay, quick. Alright, so obviously in March, you know, we did, like, it's really easy to see in hindsight, but you know, obviously we did dip down to these lows after dollar started to gain some massive traction. You know, dollar was roughly at 100, I think 104. It's at 94 at the moment. So yeah, we did see a bit of a pullback, and gold went all the way up to, you know, 2,000, nearly 2,100. Now we've just been in this strong bearish corrective structure. Okay, strong bearish corrective structure. Okay, strong as hell. You know, strong bearish corrective structure. Okay. So now, fundamentally, we've seen, you know, strong US economic data, US growth, so forth. Now we're seeing a lot more inflows into the dollar, and you look at the dollar, like, it's essentially the reverse. Like, you put these two things side by side. Let's go. Where is it? Yeah, March. Like, massive. So, you know, after March, like, here, and then you just start rallying. Anyways, so I'll show you something as well. Let's go back to 2011, I think. So yeah, this is just gonna show you some historical. I'm gonna show you some historical repetition. Okay, once my chart wants to load. 2011. Alright, let's go gold. Alright, so gold, alright. So this was like the sovereign debt, like the Eurozone crisis. I'm not going to go into too much detail about that, but alright. Gold went from literally 1500 to 1900, okay? And then literally it just got freaking corrected, okay? It just got corrected, okay? And I believe 2011 was when the US was about to default, okay? But they needed to, because, you know, Congress and that, you know, they were arguing back and forth how they didn't want to raise it, the debt limit, and so forth. And once that happened, we did see, you know, more inflows into the US dollar, and outflows out of gold, because gold is only going to appreciate when there's in times of fear and uncertainty, okay? So and especially because, yeah, and then with that as well, okay, so that as well, once that was all cleared, we did see, you know, a lot more economic growth, a lot more economic prosperity throughout the US economy. We did see we did see like tapering, like their tapering programs, completely be diminished, and completely stop tapering altogether, and then start increasing rates. And then you see massive, like literally massive inflows into dollar, and massive outflows out of gold, because gold's only going to appreciate in times of uncertainty and fear. Like when you're trading an asset, like you're trading stocks or whatever, you need to know fundamentally when and why it's appreciated at certain levels. That's one thing you have to ask yourself. Like I could have like a whole 1 hour video describing, talking about gold, but that'll make this video way too long. But really, gold is just a fear asset. So it's like the VIX. This is not exactly the same, but similar to the VIX. It's just an asset that you can invest to, and it's going to appreciate in times of fear and uncertainty. All right, so moving on, US30 currently at all-time highs. So very good, very good break and retest above the previous highs here. I believe at 35,500. So to me, I'll be adapting to some buys at 35,800, but I'm not really too inclined on buys. I don't really want to buy at the freaking high. Like to be quite honest, I don't really buy at the highs. That's what I'm talking about. The Federal Reserve and tapering. I do see, I'm seeing a pullback in our equities, because tapering means interest rate hikes are going to happen rather sooner than later. So that happens, that's going to decrease revenues for businesses, and we're going to see a pullback in our equity markets. So obviously we can take some sells once you break below 35,400 or 35,500, push further to the downside, target these previous lows here. But honestly, if we do, for whatever reason, strong earnings, push above 35,800, we can continue to the upside and potentially go back to potentially go to 36k. So obviously breaking retest below 35,500, we can adapt to some sells, take it down to this previous order block highs, and potentially these lows here roughly. So that's what I'm looking at the moment. Obviously, we got the big catalyst this week with FOMC, and quickly let's just go across the board on our equity market. So Dow Jones, as I said, back at all-time highs. I believe Nasdaq is at all-time highs. Yeah, Nasdaq is at all-time highs. So to be honest, don't be surprised if there's a sell-off. China starting to pull back a bit. Aussie pulled back a bit after RBA announced interest rate hikes by mid-2023 instead of started Q1 2024. Nikki's in a high time frame consolidation. Germany is failing to come up above the 15,750 highs. Euro equities are bullish, are very hot, and as we can see, FTSE's just FTSE's just in a bit of a pullback. So UK stock market's in a bit of a pullback. So overall bullish across the board, across our major equities. But keep in mind, FOMC this week, RBA interest rate decision, and Bank of England as well. So hope you enjoyed the video. If you did, please be sure to like, share and subscribe, and safe trading everyone.